What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief Show. Got an interesting show on our hands because I'm introducing a new segment called Power Charts. Power Charts. I don't know if I'm going to be doing this all the time, but I'm going to be introducing some stocks that I'm looking at in this current stock market environment. In today's show, we're going to be going over some bullish things, and we're also going to be going over some bearish things. This is going to help you get a good overall picture of the stock market, all right? Every coin, as Robert Kiyosaki says, has three sides: heads, tails, and the edge, right? We want to stand on the edge when it comes to the stock market and look at both the bullish and bearish perspective. Now, most of the charts I'm going to be showing you are not going against the grain. They're going with the trend, which has been bullish. Before we get into today's show, I want to go over two housekeeping things. One, watch out for the spam accounts that look just like me. That's not me. I'm not going to give you a WhatsApp number, right? They keep on popping up. They're like weeds. Ignore them, report them, etc., etc. The second thing is I just launched a sponsored video today recently, and I didn't get that much bad feedback on this one, but oh my gosh, like I don't understand why everyone gives me such a hard time for making sponsored content. So I wanted to just quickly give you my thoughts on my sponsored content. For one, I am extremely clear, despite what you might be saying as, oh, you're losing credibility or, it diminishes trust or whatever the case is. I'm extremely clear every time that I'm going to bring on a sponsor. I'm going to let you know if I have money in prior to the video or potentially thinking about putting in after. I think it's extremely unethical to invest in a company and then try to talk it up. I just don't find that to be right, especially if it's a company that's paying me to build out its profile. And then three, most people don't know this, but a lot of content on YouTube, when it comes to getting sponsored content, they don't even mention. Okay, and I know this for a fact because I see some big YouTubers do it all the time. They do not even mention that they're being paid by that specific company. So I'm trying to be as trustworthy as possible and ethical as possible, but still try to bring in some type of income that supports this show that I can bring you every single day. So that's all I got to say about that. So I just want to kind of alter your thinking just a little bit before you just attack at me. It's just crazy, absolute craziness. So let's just go ahead and get into today's show. All right, welcome back. We're looking at the market dashboard. I'm going to be flowing through this and we're going to get into the power chart segment. All right, first off, what do you know? Technology leading the way in the 11 sectors. I mean, really, honestly, if it wasn't for technology, I think we would have had a down day today. Energy lagging. Okay, I cannot wait for energy to just go a little bit lower. If it could just go a little bit lower, I'd be very happy. Now, why did technology lead? Well, look at the yields. Down 1.28 on the 30-year. I don't have the number in front of me on the 10-year, but it was down today. And there's a little bit of concern here. All right, I'll tell you my concern. First off, we're coming into a prior low. All right, so are we about to right here bounce from this point and then all of a sudden it is a higher low? And if that was the case, once we get into the gold and silver charts, it could also represent a fake breakout of what we're seeing right now. So that's one concern. As far as technology goes, technology clearly likes the yields falling and they do not like it when the yields rise. So is this the start of a trend where we're going to start heading lower, or is this a lower high where it starts the 10-year and the 30-year regain its traction and start putting in a higher high, which would be putting pressure, like I said, on tech. It could put pressure on gold, which it already has. So we're going to have to keep a very close eye on that relationship. Now, oil, right? Energy was the lagger. So if we pull up oil, it's just a confusing candle again. So we've been literally coiling up, building all this energy within this pattern right here. So we're going to break out or we're going to break down. I'm kind of hoping that we break down. Why do I hope that? Well, it might bring here's the weekly time frame. First, let me show you this. I have a target right around here, this pink box, and if it coming down into this range, I think it's going to set up an excellent opportunity to buy into some energy stocks, specifically around oil. And that could be, like I said, a 2-year, on prior episodes, a 2-year breakout, then a back test on the weekly time frame, and then we potentially push higher. So I would love to see that, or even potentially right here into the 20-week EMA. Now, another thing that could be driving the price of silver and gold, and also potentially equities higher, is the falling US dollar. We're looking over here at the USD, and we had another pretty significant down day, but we're still above that 92 level. So we closed at 92.07. We're right there. Pretty bearish looking candle overall, right into an area of support. We're back below the 20 period. We do have an upward sloping 50. So right now it's not the greatest, but the dollar or the S&P 500 didn't react all too positive overall. It did have an up day, but we'll get into that here shortly. This also type of move could very well have helped benefit the move in gold and silver. So if this continues to fall and we see yields kind of just stick around where they're at or drift lower, I mean, that could make sense for a breakout right here in silver because we saw a nice day here. We had an uptick in volume, nothing crazy, right? We're above the 200-day. This to me looks pretty good. The only kind of concern here is that 50-day moving average right there, right next to this prior resistance. So what can we see? Well, we might see a breakout, back test, and then potentially head higher. That would be absolutely amazing for not only silver, but like the SILJ, the silver miners, junior miners, or the I think it's the SIL. That's the silver miners, not the junior miners. Yeah, gold. Now gold, this is interesting to me. It's coming right into the 50-day moving average. It could right here be putting in that higher low. That would be a very good sign. This breakout though, we have it on deteriorating volume. So it's not the greatest volume right here. So it still has a lot of work to do. We do have an improving RSI, so it's looking good. Overall, the price percent oscillator is still negative. It's still below 0, but it is in bullish trend. So it looks good right now, but we just need more confirmation on this type of move. From what I'm hearing is other people are believing that this right here, the 10-year yield, is putting in its higher low right here, which would mean that they would be positioning themselves to either short gold and individual stocks of miners and or short gold too as well. So we got to just be on the lookout for that. So don't be too depressed if this kind of rolls itself back over. But right now it's looking pretty positive. Now, I want to go over a couple of potential bearish things before we get into the indices here. So first off, looking at the XVG, this is important. All right, this is a kind of just a broad-based look at the markets here, and it helps me determine kind of internal strength if it's being supported. And what you look for is divergences within the XVG to the SPX. And you can see here in 2018, we had a high here and a lower high. And you saw that right here in the S&P 500 too as well on the daily time frame. You had a low high to a higher high. That was a negative divergence, right? And then we started to roll over. Very similarly, right here in 2020, we had a lower high right here on the XVG, a higher high on the S&P 500. Negative divergence was then confirmed. And what we're starting to see right now is that large move in the S&P 500 in the month of April, but it's not really being supported right here by the XVG. So it doesn't mean anything as of right now because this could just automatically fix itself, but it's something to take note of because there's been prior negative divergences that do play out to be somewhat of a topping type signal. Now, another thing that I want to call out that I put it on Twitter, if you don't follow me there, you can follow me there. I share some of the charts. This is the percent of stocks above the 200-day moving average, and this is very bullish, okay? 94.99 print, but it's also pretty darn overextended in my opinion. All right, so very bullish, but from a contrarian standpoint or as a sentiment standpoint, it's like, okay, pump the brakes here. How high is this actually? Well, we haven't seen these high prints for about 10 years. So yes, it's very overextended. And sometimes when we get these dramatic moves to the upside, they can retrace fairly quickly to correct themselves. So that's just one other standpoint. It's both bullish and bearish, but from a sentiment standpoint, contrarian standpoint, you just got to be just mindful of where we stand. And you're going to really like where we get into the S&P 500 chart and the Dow Jones charts, because I'm going to reiterate some things that I said, about a month ago when we reached these levels. Now, here's the VIX. This to me is actually kind of bullish, and I'll tell you why. It's short-term bearish, but it's also bullish in a way. First off, pay attention to the Bollinger Bands. This one is not pointing up by any means, so it's heading lower, this Bollinger Bands. We're at the lower range of this Bollinger Band, and sometimes when we reach down there, which we haven't for quite some time, right, you get bounces to the upside, boom to the upside, boom to the upside, boom to the upside. So that's bearish for potentially the short term. But if it's contracting like this and it's below this area of resistance right here, yeah, we might come in to fill this gap, but it also does suggest that we're trending lower here. So that could be very bullish for the stock market. Now, there's nothing that can say that this can't just rip up higher and this all of a sudden start expanding again. So that's always a possibility. That's not what I'm trying to say. Even the RSI print right here is lower than it's been for quite some time too. So to me, when I look at this, I'm like, okay, this actually kind of looks a little bit bullish. There are some, obvious signs of being at a level of support, and then also at this lower Bollinger Band where it can move up. So we need to be mindful of that, but also we're heading in, tomorrow is Friday, which is quote unquote VIX crush day, right? That means we could even head lower than where we currently stand on the VIX and even have a stronger move going into the weekend. So we'll see. Then another thing that I want to call out here, the BP SPX chart. This helps me understand, when we come into areas of resistance, or areas of overbought territories or oversold. And I want to just call out the RSI. We are oversold. It's 72, highest we've been for quite some time. Just looking back, okay, we haven't been there since the early 2020. Right here where the market pandemic hit. So we're at a high extended reading. Even when you look at the percent of stocks, the 82.6 on buy signals based on point and figure charts, that's also an overextended reading. Now, you can stay overbought for a long time. All right, that's not what I'm trying to say here. That doesn't mean it's going to just roll over. However, when you're at these levels and you see the stocks like the ones that we're going to be going over, the power charts, you need to just be very aggressive on taking profits, or just be very aggressive on your stop losses and make sure you're updating them, because you never know. You can go along a bunch of charts, they look great, and then all of a sudden they just rip to the downside, and you don't want to be just caught off guard with that, all right? Same thing with the BP NDX. We're moving into overbought territory. We're there, 70.39, okay, up a little bit on the day. 76% of the stocks based on the NASDAQ 100 bullish percent index, this is saying 76% of the stocks are on buy signals. We're coming into that little area of resistance, okay? So understand what I mean when we're a little bit overbought here, okay? And we're a little bit overextended, and we're seeing some negative divergences. Those are the bearish type views, okay? And they can't be ignored. So if you are ignoring them or disagree or don't want to agree or just want to ignore them, I'm stating fact, because I'm looking at a chart and I'm telling you and I'm showing you what it actually says on these readings, all right? And that's kind of, I'm interpreting it, and you can interpret it differently. A lot of people might look at this and be like, it's at 70, that's super bullish. You can do that. I wouldn't argue that, but I would be bullishly cautious, if that makes sense. Not necessarily bearish, because of just the context of all these charts right now are just crazy. Okay, so now daily time frame for the S&P 500. A little bit of an update, right? Up 17, all-time high. What do you know? It's like every week we get an all-time high. Nothing new there. It's kind of getting old, right? No, it's not getting old. Let's keep on going, baby. Woo! All right, so well, this is what I want to call out, though. We had these overbought readings, right, that I pointed out, some negative divergences. All right, do you remember when we were over here coming into this area of resistance right here, and I started making videos about pumping the brakes and calming down and chilling out right around here as we're moving into a level of resistance? Very similar, I was talking about certain indicators, and if you don't know, just go back to the chart when the day we ran in here, and then all of a sudden everyone was saying, you're so bearish, this and this, you haven't changed your mind, blah, 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 blah. And look what happened, all right? Bam, to the downside. Oh, no, we're all good. We're going, bam, to the downside. Oh, see, you were wrong going up. Oh, bam, to the downside. All right? That's what people do. That's how much emotion is. And then what did I start talking about? I started talking about the large range candles. During this time, these large range candles, when I say large candles, large range from open to close or high to low, that create a lot of drama and a lot of emotion. Well, I can see that by people's comments, by responses, by the amount of subscribers that I get during these very dramatic days. It's like clear evidence as to why I'm saying these type of things. When it, more drama, more emotion, that's what it does. And now guess what? These small range candles, less drama, less emotion, less views, less comments. What do you know? Why? Is because people are just kind of calm right now, just drifting up higher. But as soon as we start seeing bigger candles, guess what's going to happen? More drama, more emotion, all right? So what we need to do is prepare ahead of time so we're not sideswiped by more drama, by more emotion. We need to have a game plan. The game plan right now is that we're moving into this level of resistance. Back here on this megaphone pattern, this descending brightening wedge, we said what? Target of 4,100. Go back and watch it. We reached the 4,100 marker, right? Well, not quite, but 4,098 and 19 cents. That's pretty close, right? So that finished off that pattern, and we're just moving right here. That's not to say we can't go higher, but it is to call out the emotion, the psychology, and I'm trying to get you to think that way, as we did the same thing over here. And like I said, it doesn't mean it's going to roll over. It does not mean that. It does not mean that, but you need to be aware of what's going on, right? Right? Okay. Dow Jones, same thing. What do you know? Resistance. Now, this actually doesn't look as bad, in my personal opinion. This looks like a consolidation too, just like the S&P 500, right? We kind of moved a little bit higher there, but this looks like a pretty solid consolidation. If we start breaking down, I mean, overall context is still very bullish, right? 20 sloping up, 50 sloping up, 200 sloping up. We are just at this level of resistance up here. It can drag out a little bit higher, so this can break out and even push itself higher right here. We're not overbought here on the RSI. Price percent oscillator is still pretty decent right here, but just notice the tight range that it's in and just pay very close attention on a break to the downside of these previous couple of days or breakout to the upside, and just be aggressive, right? If you're up, you're up. Take some profits off, or start making sure that you have a stop loss that you feel comfortable with, all right? Or don't. I mean, if you don't, then I don't know why. I mean, if you're not active in the markets, I really don't know why you're watching right here at this specific point in the video, because it just doesn't make sense. Okay, here's the cues. All right, this is also important. Where was the target of this inverse head and shoulder breakout? It was the double top and potentially push higher. All right, so guess what? This is pretty crazy because the target that I had was to fill the two gaps above this based on the 30-minute time frame. So could this be a double top as we're getting into that overbought territory? Maybe, but honestly, it's so bullish right here. Maybe we just take a little pause and then break out. Maybe we continue this press, because April, based on seasonality, is extremely bullish. What I do not like about this is that the market's just moving up higher because of the overnight sessions, and you can see during the cash sessions, volume is pretty weak. Like, just dying off. And that's a little bit of a concern for me, all right? Now, here you can see on the 30-minute time frame for the Qs, this gap right here, that was that final gap that was above us. Look where we gapped up. We gapped through this little pennant bull flag that we talked about yesterday. Boom, gapped above, just went a little bit higher. Now we have another little type ascending triangle, and look where we traded, right in that gap. That's so weird. I think they're messing with us. Negative divergence right there too as well, and we have now gaps below us. So the gaps above us were significant, right? Bam, that filled the gap, and then bam, that filled the gap. Will the gaps below us be significant? I don't know. I really don't. Now it's time to get into the segment called Power Charts. Power Charts. And we're going to be going over 6 charts. All right, and these are just setups that I have my eye on, and I've shared some of them on Twitter. Let's get into it, and I'll walk you through my thought process. And I'm taking some of these, by the way. I've already taken profits, $400 or $500 from UA, and I said I was going to revisit it when it's right around these levels, so I'm revisiting it here. First off, had some very unusual volume come in, and then all of a sudden it started hitting Twitter, right? Like all these call options, call volume is going crazy, going bonkers. And I got in right around midday a few days ago, and then I got out of the position before this red day because it was looking like it was kind of just taking a break there, all right? But I wanted to call out this little resistance, pretty just strong resistance line right here, but we have some strong volume accumulation taking place. The price is back above the 20-day moving average, right? We had a little bit of a drawdown today, but the bulls step right back up. So just think about this candle right here. It opened up, it was red on the day, and then all of a sudden the bulls said, nope, we're not done here, and pressed all the way back up to almost the high on the day, all right? And that made it a positive on the day. So this is, to me, a pretty good sign at this particular point in time, especially when you match that in with the volume that came in. So I think that if we can break above this resistance, it can make a very good trade. And I think that it'd be an easy target to reach just back to 20 and potentially even higher if this volume continues to accumulate at these levels. The price percent oscillator is looking like it's going to be doing a bullish crossover as well. So why do I like this chart? Why do I like this setup? It makes for a very good risk versus reward trade. I don't mind putting a stop loss below the low of this candle, which was 1850. So the low is 1846. So I'd put it at 1839. Okay, and then I would enter in. Now, if we get a huge gap up to 20 tomorrow, I'm not going to enter in, right? But if it's right around the 19 range or just above 19, or if I wait for it to break out of this previous like 1950, not 1950, 1920, probably right around there. If I get some confirmation with some volume coming in, early in the day or even midday, that would feel pretty good. I'd be pretty confident that I can grab a couple dollars per share on that move. So I'm going to be keeping an eye on UA. You better believe it. SM Energy Co. All right. This looks to me like high and tight pennant or high and tight ascending triangle. What do I like about it? First off, we're consolidating. The moving averages are a little confused, so I can understand why somebody would want to wait for confirmation to break above $20. That to me makes perfect sense, especially with the RSI. It's still trading above 50K. It's, it's just kind of floating around there. I like the overall context of the chart with the 50, the 200-day moving average. That to me looks good. What also I like is a little bit of volume came in today. Not much, but a little bit more on a hammer candle. So that means we had sellers increase because this was a pretty red candle to the downside, but the bulls pressed it right back up. So that's a good sign so far. But I would like to see a little bit more strength come in to be really committed. So a couple ways you can play this. You can enter into it at the lower range here, have a stop loss below this, or you can wait for confirmation on a breakout and look for some strong volume. This is a high beta stock, okay? So pay attention to how much shares you buy because this thing moves a lot in a day. Just to give you an idea, this was a pretty small range candle right here. The low was 1650, we'll just say. The high was 1750. Okay, so that's $1 per share swing, and that was a small candle. There's some bigger candles you can see previously dating back, so you can get $2 swing. So if you're buying 500 shares, you're gonna have $1,000 swing, from high to low or low to high there. So just note that. Next one on the list, Rick James. Nah, I'm just kidding. But it is Rick. RCI Hospitality. Bullish context overall. This looks like a pretty strong day. Got cleared above the 20 period moving average. I like the looks of that. And then the other moving averages, the 5 and the 10 are pressing up too. I like the volume accumulation right here. We had a nice big pull of volume right here, strong relative volume. And then we see it kind of just slightly down, but we're also kind of consolidating sideways. So if we start breaking above this 70 marker, hey, that might set this thing high. I like the RSI trending up, and I also like the price percent oscillator looking like it's going to start crossing over bullish. Now, what I would do is I'd enter in, and I'd have a stop loss, and you can wait for confirmation break, or you can enter in prior, and then have a stop loss below the low of that candle. Okay, that's how you set yourself up for success. You want to cut your losers quick, and you want to let your winners win. And then when your stop loss, as candles progress, you want to just move your stop loss up or take a little bit of profits too during that. The next one, Sono. This one is breaking out in my opinion. It looks like a breakout move and it's being supported by some strong volume. I entered into this. I told you all right when I entered into this on Twitter. I announced that, but it put in higher lows here, put in lower highs right here. You can see it coiling up. Maybe we break out. If we can break above this previous high right around 44, hello, that can go a lot higher. The bullish price percent oscillator looks like it's about to cross over. I mean, this to me looks pretty solid. Now, keep in mind, if the overall market, okay, I'm just trying to set myself up for success by looking at high probability risk versus reward setups. But if the overall markets, being that they're overbought, and we've already pointed that out, that doesn't mean that these high probability setups or good risk versus reward trades are going to pan out, right? That's why I have a stop loss so tight. That's why I'm aggressive with profit taking in this environment. I'm going to let my winners win if they win, but then I'm also going to make sure that I'm in the green as soon as possible. And I always get to this stage, and I always say it, and eventually it's going to work out really well. But I love getting to the point in the trade where it's not a question of will I make money, it's how much can I make. And in order to do that, you need to have your entry point and your stop loss obviously below your entry point on a long position. And then you get to the point where your stop loss is then just right above or at your entry point. So that means that the stock was moving up, it's seen success, and now you're risk-free on the position, unless if you get some massive gap down the next day or something like that, your stop would get ordered way below it. But you understand what I'm saying. And that right there is where I really like to get. But then typically, as of lately, all these false breakouts and stuff have been hard to deal with, to say the least. But we're still making money. Okay, hope you are too. Here's ALK. Now I brought ALK up because I like this trend right here. I didn't draw any lines, but I'll walk you through my thought process. But a lot of airlines actually look pretty solid right now. And that could be because things are starting to open up. I heard that prices of airlines are starting to increase too. Now, what do I like about this? First off, the overall trend, pretty bullish. You can just look bottom left to top right. Price percent oscillator, it's above 0. It looks like it's about to do a bullish crossover. Relative strength, I added that in here. I should have done it on the other charts too. Trending up, okay? So it's outperforming the SPY. It's a good sign right there. It's a high beta stock. We have a little bit of a hammer candle here, still holding above the 20 period moving average, okay? And we're kind of just right here at this little double top at $74. And it's just putting in these higher lows here. So I feel like if we start breaking above 74, we have a lot of room to go here on ALK. And I just like this trend. So I would enter in pretty much anywhere here, to be quite honest. And I would just have a stop loss, probably following just below the 20 period moving average. Sometimes if you get above the 20 period and you just trail the stop loss right below it, you can see, bam, you would have got stopped out right here. All right. And then if you, if you entered back in, you would have got stopped out right here. So sometimes when it starts pressing above the 20 period, you get a nice move like this. And it's very possible that if we had the markets continue to press forward, this could be just a pretty good trade. And I just like these type of setups. So that's what I'm looking at there. Here's CRWD, CrowdStrike, popular name. If you haven't heard of it, I'd be quite surprised. Relative strength started picking up here in April. Okay, it's, in a seasonality chart, April does pretty good. This is performing better than the SPY based off of relative strength. Price percent oscillator, it's still below 0, but it did have that bullish crossover. And if you look here, pretty solid move today, up 4.91%. RSI is trending back above 50. We're back above the 20 period, and the moving averages, the 5 and the 10, are crossing above there too. So when that happens, we might result in a nice big move to the upside. Now there's some resistance right around 210. All right, that's that previous high right there. So you see a high, a lower high, a lower high. Will this put in just an area of resistance, or will we put in a higher high, potentially changing this trend? Now, if we do a solid breakout, the target would be 250, and we're trading right around 210 right here. So, that's a big move, all right? Even if you buy a few shares of that, that's a pretty big move. So I'm going to be keeping an eye on this and seeing where it goes tomorrow. I probably will refrain from it if it has this gigantic gap up or anything like that. So I'll be keeping an eye on it, but I do like the breakout so far and this little uptick in volume right here today. So, all right, everybody, that's all I got for you as far as power charts go. That's all I have for you on the market brief. Just to recap my thoughts, all right, just so you understand where I'm coming from. A lot of bullish setups, which is a very good thing in a bullish environment. But just take note that there are some overextensions going on. There's some overbought territory. So you must be bullishly cautious and just aware of what is going on and what is taking place within the internals and the overall structure of the stock market. That's all I got for you.